Hey guys, it's Reuben here from New Wave Accounting. As we approach the end of financial year for 2021, I want to go through a few tips on how to make sure that you're growing your business in the next 12 months or in the new financial year. So tomorrow will be the 1st of July, and a lot of people will just go back into their usual method of running their business and just stay within that daily grind. Now, I highly encourage you to look at 3 aspects within your business so that you're ready for the next 12 months and you're not just flying blind. So the first thing you want to make sure to do is to prepare your tax returns super early and to stay on top of all of your compliance. Now, just because you prepare your tax returns early doesn't mean you actually have to pay for your tax returns. What we want to do is make sure of the outcome of their tax return so that you can plan, budget, and also be aware of how you went in the last financial year. Now, if we get this done, not only does it give you an opportunity to forecast forward, but it also brings up other opportunities such as being ready for grants, ready for finance when you need it. A lot of people get stuck when suddenly they want to buy a house, they want to buy a commercial property, or they may look at government grants, and it's just far too late. They don't have enough time to actually process their tax returns. They find out too late that they have an amount that they have to pay, and they're just not ready to plan and execute on opportunities. So I highly encourage you to prepare your returns early and stay on top of your compliance. The second tip is to look back and reflect on the prior financial year. Now, a lot of our clients regularly see us on a quarterly basis so that we can keep them updated. But for those businesses who don't, it's always a great idea to sit down and spend maybe a day just having a look at the prior year's historical data. So going through your zero account, looking at your profit and loss, looking at the actual outcome that's happened, and then assessing what went wrong, what you did well, and then using this as a guideline to make sure that when you plan forward, you're not doing you're doing certain things and you're not doing others. So that's very, very important. So that's how we're able to assess opportunities as well. The last and final aspect is looking forward and doing a bit of strategic planning. Now, I want to dive a little bit deeper and take a little bit of time to go through how we do it here at New Wave and how you can do this for your business, whether you're a restaurant, whether you have a hairdressing salon, or whether you have an e-commerce business. It's very, very important to have a strategic plan for the next 12 months, and at least for the next 12 months. You can do this for the next 5 years if you want to. The first thing I want to touch on is cash flow projections. 90% of the clients that we come across, new clients, do not have a cash flow projection. And to me, this is this shoots out alarm bells. It's a red flag because you're basically flying blind. You've put on your blindfold and you have no idea where you're going, and you're basically running the business day to day, week by week, even in terms of cash flow. So what I would like you to do is basically try to get a good understanding. And if you can't do this yourself, engage an accountant or engage someone that has the ability, whether it's a business coach, a financial planner, to assist you, sit down with you and map out 12 months. Now, each month you want to try and find out exactly where your business is going to be. Well, as best as possible. We don't have a crystal ball, we can't see into the future, but we can probably get it 80-90% right most of the time. So in essence, what you want to do is figure out each month's revenues, taking into consideration fluctuations as you've seen in the prior financial year. Now, if this is your first year, you'll just have to take a stab at this and just estimate each month. But if you've had prior year historical figures, look at your prior years, see which months go up and see which months go down, and then add in maybe an increase or a decrease, even if you think it's going the other way, in the percentage of growth for revenue. That way you're aiming towards something and not just trying to make revenue each month. After that, you want to make sure that you understand your margins, your cost of goods sold, what costs are directly associated to each dollar of sale. If you make $1, how much is actually left? And last but not least, looking at your overheads. These are the expenses that rarely change month on month. So they're going to be administration costs. You may have some rent, stationery, all those sort of items that you're just buying month on month. And even if you don't make $1 extra, you're still going to be paying those expenses. If you can get a clear indication of that each month for the next 12 months, then you're able to see where you're going to be profitable, where you may not, and then ultimately see if you can build that into cash flow in and cash flow out. So we have to remember that profit is different from cash flow, cash in your bank. That's one of the questions we get all the time. How come my profit doesn't tie up to my bank account? And it all comes down to various factors such as loans that you're paying out. You may have ATO debt. You may have debtors or creditors that have been accounted for, and a lot of people are just looking at their profitability thinking we're going to do well in the next 12 months, but some people may not have the cash to actually run the next month or the next 2 months. So it's super important to have a cash flow projection. Again, if you need help with this, let us know. We can sit down with you, map out the next 12 months, and we can even do a few different scenarios where you might say to us, look, we want to buy a car in the next 6 months, we want to get a new warehouse, we're going to increase prices, and we can model this into different scenarios. Now, cash flow projection is one side. After you've done your cash flow projection, we always like to set a budget. Now, a budget are your targets. So what is it that you want to achieve month on month for each item on your profit and loss? So your revenue, your cost of goods, all of your expenses, what are we trying to target? Now, if you don't have a target, you're basically, who knows what you're aiming for, and how can you set goals? How can you, motivate your staff or yourself if you don't even know what you're aiming for? So it's super important to put a budget in place. With that budget, obviously we're monitoring this on a month-to-month basis. That budget doesn't change. It shouldn't really change month on month, whereas the cash flow projection, it should be a rolling cash flow projection, because if there is a big change, let's say next month you find out that a big expense has come through, we need to adjust that cash flow month on month, and you're monitoring this month on month so that you know exactly what the next the following months are going to be in terms of your cash flow or the money within your bank. Let's look at goals. So here at New Wave, every single year we do planning, strategic planning on where we're at the moment, where we want to be, and how we're going to get there. So we do a simple one-page plan. In this one-page plan, it's very concise so that the whole team is on board, they understand it, and we're all aiming towards the same goals, the same plan. But it allows us to have a very powerful, forecast of where we're going to go. Now, in this strategic plan, we want to go through our purpose, the simple things, your mission, your purpose, the core objectives within your business, and why we're doing it. Why are you in this business in the first place? And then, where do you want to be? What is your big, hairy, audacious goal? That's one thing that a lot of businesses don't look at. They run day by day. They focus too much on making money and not enough on the purpose of their business. If you can combine those two together, you'll have a great business down the track. Part of the one-page plan is structuring your team, making sure that you know exactly what team you need for the next 12 months to reach the revenue that you are trying to achieve. So there are certain parts in here, and I always like to run a business in a way that it could be sold down the track. You don't have to sell it down the track, but if you plan this way, then you're trying to remove yourself from certain areas of the business, and ultimately someone should be able to basically take over your business without you being there and run it. And that's how you're going to get the highest value out of your business as well. So plan out a team structure that doesn't have to be in place from day one, but something that you can build towards, something that if you put it in place, you know that you'll be able to not only take yourself out of certain areas such as administration, marketing, sales, whatever it may be, but it also allows the business to grow. And this has to be in line also with your cash flow projections and budgets. Now, with all of that information, you also have key targets and your KPIs, your key performance indicators. So these are going to be your revenue, if you have your average order value calculations, if you want to have number of clients or number of products, whatever it may be, this has to be specific to your business. Now, for an e-commerce store, for example, we're probably looking at targeting conversion rates, average order values, obviously revenue, but we want to be looking at things that move the needle in terms of profitability and growth in the business itself. So these are the KPIs you set, and they're the KPIs you'll be following month on month, trying to achieve them. You don't need a lot. If you have 3 to 5 KPIs, it's perfect. The more you have, the more administration you need to actually keep track of it. But start off small, but make sure that we're always progressing. Now, the last part is obviously actioning the plan that you've put together. Now, this can be broken down into quarterly projects and obviously annual sort of goals and timelines. In these projects, each quarter, you might have 3 action points that you want to tackle, but these need to be sort of low-hanging fruit. They align with your strategy, your planning and cash flow projections, and you need to be able to assign this to a certain person in the team so they have accountability to get it done. So if you have a large team, you might assign a few projects out. If it's just yourself, you need to assign it yourself. Pick the top 3 that align with your goals, and then make sure that they're getting done each quarter. And obviously, last but not least, you're always keeping track of your quarterly revenue goals and profit. So that way, you're always moving towards something rather than nothing. Last but not least, in terms of forward planning and strategic planning, probably more so now than ever, is planning for emergencies. So COVID is the perfect example. Who knows where we will be in the next 12 months, 2 years, or even in the next 5 years, but we always need to plan for the worst in case it does happen. Now, this means lockdowns, this means you getting sick yourself. So how do we mitigate that risk? You need to put this into your strategic plan as well, because we now live in a different world where we can't just travel and live the lives that we used to. So be very aware that everything that you do, you need to have some type of plan to be on top of a lockdown when it happens, to be in front of your competition when things change. So have a think about those factors. So those are the 3 main areas. So I'll go through it again. So we want to make sure that you prepare your returns early and stay on top of your compliance. We want to look back and reflect on the prior financial year to get ideas of opportunities, ideas of what you've done well, what you haven't. And last but not least, looking forward and doing strategic planning. So if you do these 3 things, I guarantee that it'll put you in a better position for the next 12 months. I guarantee that you'll have more motivation, and it'll excite you to actually tackle these things. As you hit those goals, as you reach your targets, you'll find that the growth of your business will be much faster, and your direction of your business will be much clearer as well. If you have any questions, please let us know. You can book in an online meeting with myself or one of our team members. It's www.newwave.com.au, or you can visit the ecommerceaccountant.com.au. Thanks, guys.